Are you looking to do deals and master flipping houses? Welcome to the DoDeals show with our host, Mr. Tim Mai. As a successful investor and mentor to many real estate investors, Tim's students consistently run 6- and 7-figure investing businesses. Each week, you'll hear from top real estate investors who share the best strategies, systems, and secrets that you can use to be more successful. Tim and his guests will pull back the curtain for you to learn their exact tactics, tricks, and tools that are working best right now in today's real estate market. Now, let's welcome Mr. Tim Mai.
Well, hello, everybody. Welcome to another great interview we're about to have here. I'm your host, Tim Mai, and today I have on the line with me Edna from, I'm going to have to pronounce this correctly, Saskatchewan.
Very close, Tim. It's Saskatchewan.
Saskatchewan, there you go. Saskatchewan, there you go. Central Canada. And Edna has an amazing, rags to riches story. She came from being a single mom at the age of 16, living in, assisted living, housing, assisted daycare, right, to being a multi-millionaire through real estate investing. She owned mostly multifamily complexes. And she's also a coach and a mentor to many others as well, to teach them basically to what she has done for herself and empower them to do the same for them. So I'm so excited to do this interview with you today, Edna.
Well, thanks very much for having me, Tim.
Yeah. So let's, if you can take us back of, a little bit about, where you've been, as well as what got you interested in real estate investing.
Okay, sure I can, Tim. So I'm from small town Saskatchewan, and what a lot of people will know about small town living is there's not a lot to do, and thus I got myself in some trouble when I was young and ended up having a child when I was 16. Now, we're still close to this day. I raised her myself with the help of my parents, and she actually still works with me. She does all my property management, so it works really, really nice. But when it happened, it kind of limited my options. I was never really interested in going to university, but by having a child, it kind of cemented the deal because there was no money to do so and all that. So I just got a job. And even my jobs were boring, and it was like, oh gosh, how do I get myself out of this? Because I realized that I wasn't living up to my potential, that I had a lot more energy and resourcefulness than I was giving myself credit for. So I started actually studying different things as I worked at a doctor's office. I was a receptionist there. I started studying different things just to try to better myself. I did a lot of correspondence courses and ended up moving to the big city, which in our area is not nowhere near the size of Houston, but maybe 260,000 people. And got myself a job that did allow me to work up a bit. And I kept kind of a slow mover. I moved up a little bit at a time, but I never really came into my own till I became a financial advisor. And I had a good job when I gave that up to go to straight commission full time. But I really felt like I could do it. I could do something different. I was a financial advisor for 8 years. I really enjoyed it at the beginning, but then after a while, I got bored with it too, and I didn't like all the fluctuation up and down of the markets and stuff. Yeah, the ups and downs of the stock market, and I found it hard for my clients to deal with, and hard for us too, because my income was all tied based on real estate, or based on the market. So if the markets went down, I didn't sell as much, and my trailers went down, and so we're kind of looking for something else that could give us some more income. So we decided to look at real estate investing. Well, within 2 years of getting started in real estate investing, we were doing so well at it that I actually sold my financial planning practice and went full time. And we attracted a lot of investors to our business, which I think to grow at the speed that we grew, you really need to have investors involved in your deals. And I was able to attract a lot of investors. And when we would go to the training classes we actually took them through Robert Kiyosaki's group, the Rich Dad training. And I'd go to the different groups, and people would always say, how the heck did you grow so fast? Like, what are you doing different than we're doing? And it came down to the fact that I was able to raise capital. So to me, it was like people were asking, all the time, how did you do that? How did you do that? How can I learn to do that? So I actually ended up developing a course that teaches people how to do that. And that's how my coaching came about is we had so many people asking us, how the heck did you do what you do, that we built a course to teach people.
That's awesome. Now, when you say grew fast, like how fast is fast? What are those?
Well, when we very first started, we set a goal that we wanted to have 50 doors in 5 years. And we felt that was very aggressive. And we actually had 50 doors in 18 months. So that was really where we got started, because we really thought, gosh, if we ever get 50 doors, that would be like, well, if we did it in our whole life, that would be great. And to do it in 5 years, we thought was really aggressive. And then, like I said, when we did it in 18 months, it was like, ooh, there's something to this. It works.
So you intentionally wanted rental properties when you get in. Why
Yes.
is that?
Well, rental properties are one of the safest, secure investments that there are out there, especially when you get into multifamily. And we never wanted to be in the property management looking after tenants and stuff. So we've always hired that out. But we'd always heard that if you can get into multifamily, because no matter what happens in the economy, people need a place to live. And at the very worst, even myself, when I was a young single mom, I had subsidized housing. So even though I couldn't afford my rent, the government helped me out, right? I always worked, but I had a whole house. I still remember at the time I had a 3-bedroom house for like $300 a month. And then I got roommates to help me with the rent then, because, when you're making $1,200 a month, it's still high. And so I always felt it was one of the safest, most secure investments you could have. And I like being able to drive by my assets and see what they're doing, and know that tenants are actually paying off my property. That was really huge for me when I figured that out. And it took all that ups and downs of what I was going through with my clients of the mutual fund market.
Gotcha. Okay. And did you start out with single family homes, or did you jump in with multifamily?
Well, we actually, one of the fears that we had when we started out was dealing with tenants, because, we didn't know what to do. And so our very first property, by this time I was married, and we have two daughters together, my husband and I, and we were looking at getting into rentals. My oldest daughter was out living on her own, and be darned if we weren't offered for sale the same condo that she was living in. And I said, wow, at least I know I'll have a good renter, because she always paid her rent and she always worked. And so we ended up buying the condo that my daughter lived in. And also the one right next door, because she had told me that couple had been living there for 17 years. And we thought, they're not going anywhere. We're going to have tenants for life here, So that was our first fear. So no, we definitely started with single family. Our third purchase was an up-down duplex. And that's when we could really, really see the difference in cash flow, which was the key. And then we seen how much more cash flow it was for a duplex as opposed to a single. And so then from there, we pretty much bought all duplexes, then fourplexes, and then we moved into couple 24 unit apartment buildings. And that's kind of our sweet spot, in between 12 and 36, most of them 18 to 24 units, because then we're not competing with the real estate investment trusts. and they're good, solid investments. They don't fluctuate a lot. In our area, they consistently grow. Value increases by about 3% a year. So, and vacancy rate. The whole time we were invested was pretty low, just went up a little bit more. Right now it's about 6-7% in our area, which is the highest we've ever dealt with. But even then, that still your tenants are paying off your building.
Right, that's awesome. All right, and so I'm curious, why 50 units? What did that number signify for you?
You know what when we started, neither my husband nor I thought we would give up what we were doing currently because we really liked what we did. But what we were thinking is when we took our classes, they told us if you to buy a property if it cash flowed $50 a month. So we thought, well, if we can buy a duplex, so that'd be $50 a door per month, that'd be 100 doors. That would give us 50 properties at $100 a door. That would give us $5,000 a month. And that was kind of our real key. We thought if we could make $5,000 a month in passive income, that would be absolutely amazing. So that was the reason on the 50 doors.
Gotcha. Okay, so it's interesting that you also calculate based on $100 net per door there in Canada. We do the same thing here in Texas, in Houston, where I'm at with the multifamily. So
okay, yeah. Well, you know what? That's what I teach my students now too. If we can do $100 cash flow a door, 50 to 100 even, because you get a lot of money in mortgage pay down too. I like to spend money a lot. So one of the things that we have going for us right now that I absolutely love is that we've got over 25,000 a month in mortgage pay down alone that somebody else is paying down for us. And I think that is so key to building your wealth.
That's awesome. Okay. So let's talk about, someone getting started in real estate investing, right?
Okay.
And they say, okay, I really like what you're saying, Edna, about these, multifamily apartments. How do I get started? What would you recommend me to do to get started?
Well, the first thing I'd recommend is to invest in yourself, because it takes a special person. It takes a special way of being to work with investor money. I mean, you can take all kinds of risk with your own money, but it's just a different playing field when you're dealing with investor money. So the first thing I recommend is make sure you're the person who will take care of those investors no matter what. The other kind of claim to fame we have is we've built this whole portfolio with less than 25 investors. We haven't searched and got thousands of investors. There are people who've repeat invested with us again and again and again. And the reason that is because we treat them right. They get good return on their money. They get their money back as quickly as we can possibly give it back to them. And then they still maintain their ownership in our buildings too. Once they sign on with us, they just because they got their money back doesn't mean they're out. That means they still maintain their ownership. And I think that's really key. So first of all, invest with yourself and work with a group of like-minded people too. Like we really believe a lot in partnering up, because it is really difficult to buy. Like it's pretty easy to buy 1 or 2 or 3, even 4 houses. But if you want to scale, you need to be working with a group of investors all on the same page. And I know when we first started, we actually thought that we had to start with a house or a condo or something small. And now I'm teaching my students that you don't have to start small at all. You have to start building your mindset, and you can start straight into multifamily. We actually find it easier to get mortgages for multifamily than we do for houses.
Okay. So what's, what are you telling your investors? Apparently, it sounds like you're giving them an interest with the plan to refi and cash them out, and also giving them equity as well, right? So
Yes.
so give us an insight into what you say to them and how do you structure the deal?
Okay, so generally, what we do is when we do a multifamily deal, we're looking at maybe 40% ownerships for ourselves and 60% ownership for our investors. And what we do is we come in with none of our own money. They provide the money, and they come on title and mortgage and everything as shareholders with us. So we're joint venture partners. And what we do is we might take a small acquisition fee up front, maybe a small asset management fee, but generally we don't see our return until the investors have 100% of their principal back. So we give them the majority of the cash flow from day one. And then generally between year and 5 and 7, we pay them the difference, and then they maintain their 60% ownership. They get their money back, and hopefully we've got another building to put them on to invest all over again. Generally, they're looking at 10 to 20% return on their money over the time period, because you've got the power of leverage, you've got mortgage pay down, you've got equity appreciation. With apartment buildings, you can force the appreciation because as you increase rents and decrease vacancy, renovate to higher standards, you can get more rent. So it's apartments are treated more like a business. So even for financing, the best way to get them financed is to keep them in optimal shape, vacancy wise and whatnot. We have done renovations and increased rents in buildings we've got really good deals on, and cash people out in as low as 18 months.
Oh, wow. Okay. Mm-hmm. All right. That's your offer is very generous.
Yeah.
That's
yeah.
Now, is that a typical offer there in Canada, or because that like here in Texas that would be super generous? I think our investors would jump on that any day.
Oh, okay. What do you guys offer there usually?
Yeah. Usually they get 6%. Return, and then plus, depending, no more than 50% ownership. Let's assume there's one investor that comes in on the whole deal. They get 6% preferred, and then 50% ownership. And okay. there's no like they don't get cash out until we refi it or sell it. It's the only time when they get cash out.
Okay, and so they would get cash flow. Would they get cash flow in the meantime or not?
Yes, they will. Yes.
Okay.
Yeah. So their 6% interest is on top. So that gets deducted before the cash flow get deducted. Yes.
Okay. See, what we do is we give a return of principal until we cash them out, and then they get cash flow. So a little bit different business model. But yeah, you know what? It works really well because I think what the investors like there is that we're really not getting much at all until they're 100% got their money back. So again, I do think that's why we've got so many repeat investors. We don't have to go searching for investors. Every once in a while we get some new investors coming in. But generally we put out a deal and we've got it funded shortly thereafter. So.
That's cool. That's super cool. Okay. So if someone, you came from the financial planning background, so you have like a level of competency, right, and confidence too, I'm sure. Someone starting new, getting into multifamily, how can they gain that confidence and that competency?
Well, that's where the key is investing in yourself comes from. We advise people, first of all, to partner with somebody who's already done it. Because you know what? If you're partnering with somebody who's already done it, it takes the scare out of the whole learning curve. And like we'll say to people, generally when you're first starting, you're not going to be able to fund a whole deal anyway. So you bring in a little, I'll bring in a little. We have a mastermind group of people. Everybody brings in a little, and we all take part ownership of the building. And everybody has their strengths. Some people bring in the investors. That's usually my side. Other people manage the buildings. Other people look after the tenants, that sort of thing. So everybody has a key job. And some people, like we've actually built most of our equity just by being the money partners. We're considered the money partners because we bring the money in. So, yeah, that's what I recommend. So get a mentor, work with people who are doing what you're already wanting to do, and invest in yourself because personal growth is huge. Because you do need the confidence to attract investors, and the only way to get that confidence is to first of all know exactly what you're doing, or be working with people that you trust enough to say, I may not know everything, but our team does, or our group does, and then keep working on it till you know a lot. We never knew a lot right at the beginning either, but we partnered up with other people who had a lot of success already, and we just took it to the next level.
I see. Okay. And how do you find these deals?
How do we find the deals? You know what? Most of them come to us privately because we've been in the business for long enough, and we've got the reputation of people who buy. So a lot of times, I don't know if it's like this in your area, but people don't, especially multifamily sellers, don't always like to bring in a realtor because it costs them so much money because it's a big percentage of the building. And so if they can sell them to other multifamily buyers, between each other with no fees, they really, really like that. And they would actually rather pay a fee to the middleman in that case, who knows lots of buyers, who knows lots of sellers, than they would to an outside realtor. Because really, an apartment building is no harder to sell than a house, and the fee is really high. Like the realtor fee is really high.
Gotcha. Okay. And so you have found that the 24 units and below are the mom and pop owners that
Yes.
that likes to deal direct. Is that
Yeah, that is correct. And we also, another thing that I teach people, and we've been able to do a lot ourselves too, is to get vendor takebacks or some seller financing. Then that allows us to have to raise less money for the deal as well.
right? Okay. All right. And so how do you mentioned, yeah, most of these people are private, and you have your name out there already. So someone starting new, how would they get into that circle and get connected to these property owners?
Well, two things. One is either work with people that are already doing it, because you can bring value to a group like that too, or network. Get out to the local real estate investment meetings and stuff, because you're going to run into people who are selling and buying and looking for capital, and also looking for investments
Okay, so
in those
networking,
groups.
right? Networking is the way to do it.
Yeah, that's how I made my first connections with those people that we get most of private deals. Right now, we're working on a little bit of foreclosure property, like people that have got themselves in trouble. They're builders who built, and in Saskatchewan right now, there's a bit of an overbuild situation. So they overbuilt. They never wanted to be buy and hold investors. They wanted to just flip the building out, couldn't, so kind of got stuck managing it themselves. And now, after the market's been low for a while, they're having difficulties. So we were able to rescue finance a few people too.
That's awesome. Well,
Mm-hmm.
cool. Yeah, Houston is not there yet, but it's
No.
coming in terms of the overbuilt.
Oh, okay.
Yeah, we have tons of apartments because they've been building. Houston has been really strong the last few years, and so they've been building, and so like this year we have like 25,000 units coming online. Yeah, like
That's a
and
lot.
so we we're expecting to start to experience what you're talking about here.
Oh, you have to take advantage of it then. Yeah. There can be some good opportunities in a market like that.
Right. Yeah. Yeah. And so you mentioned earlier you like to stay under, yeah, like under 30, because beyond that you deal, you have REITs and stuff. I thought REITs and trust, they like bigger properties.
Yeah. Yeah. 50 plus usually. Yeah.
Gotcha. And then, so in your market of, let's say, under 24 units, is there a lot of competition? Because you do have a lot of mom and pop investors that, it's an easy transition for them from the single family homes over to the multifamily when we're talking about, under 25 units, right?
I don't find a lot of competition, and this is why I think is because most people are taught that you have to own like 10 or 20 houses before you can graduate to apartment buildings. And in the world nowadays, if you're managing 4 houses, you're pretty much done. And that is if you're managing them yourself, because there's too much of a workload. Dealing with tenants, all that really gives people a headache. Um, so you just have to do things wiser. You have to bring in investors. You have to get the property management in place, because if you manage it yourself, it takes up too much of your time and effort. Um, and I do think the biggest reason is because that's what people thought. I know that's what we thought when we started. And as a matter of fact, the first time I was approached with buying an apartment building, I said, "Oh my gosh, I only own 3 houses. I can't buy an apartment building." And the realtor says to me, "Yeah, you can." And I said, "Well, don't you have to have like a whole bunch of houses first?" And he said, "No." And you know what? And I was lucky. I met one of those realtors. He was an investor himself, because a lot of people, I think they have to start small with a house. And I've got I've got a pair of students with me right now. They're 20 years old. They took possession of their first apartment building, 12 units, on December 1, and they're working right now on 2 more 12-unit buildings. 20 years old, living at home, don't even have a mortgage in their own name yet, but they've got investors and working on 36 units.
That's awesome. Good for them.
Yeah, I know. We're so excited for them.
That's awesome. Okay. Well, like, I know you take on coaching students and stuff. I mean, by now, the folks listening, probably wanting to know where they can go to connect with you, learn more from you. What would you like to send them?
My website is Edna at ednakeep.com, and all my programs are listed on there. And I do actually have a free resource that I like to send people to. And I've done a video series that teaches people what it takes to get right into apartment building investing and just bypass the whole, single family home, wait a year, single family home, wait a year. And let me just see if I can find the URL for that. If I forgot to bring it out. Oh, here it is. Here it is. I just got to put my glasses back on so I can read it. Okay, so that would be training.ednakeep.com.
Training.ednakeep.com. Okay.
Yeah. So that would give them a free resource. They'd get a pretty good idea if it's something that they want to explore more. And like I said, because the biggest thing is a change of mindset. It's not a difference between Canada and US. We're all the same people-wise, and that it's more of a mindset thing and training, of course, to get to that level as opposed to starting right at one single family home.
Gotcha. Yeah. And you just mentioned, something that I wanted to ask you about was, like, is there much difference in terms of the actual investing itself in these multifamily between the US and Canada?
No, there's not. Some of your rules might be different for lending, but I teach people how to find the best areas to invest in and how to monitor an area to know what's going to be a good place to invest, what to watch for, what to be looking for when they're talking to the lenders and the vendors even. So that part's all universal. And then people are people. So when you're dealing with people, there's certain ways to talk, there's certain ways to present, and there's certain ways to keep your investors happy. And like I say, I think that's universal. It's when you're dealing with people, it's not going to matter if you're Canadian or an American or Malaysian or whatever. It just doesn't matter.
That's awesome. Yeah. Okay. Well, we're gonna wrap up this interview here. Edna, what would be the one last sort of tip or word of wisdom that you'd like to leave with everybody?
Well, I think, like, I know for myself and for many, many people that I know, the best thing I've ever done for myself is hire coaches and work with mentors who've actually done what I want to do. So I love coaches, period. But if they've done what I want to do, that just elevates them in my eyes, So if you can find somebody that is doing what you want to do, that's probably your best way to learn.
That's awesome. Yes. Thank you so much, Edna,
You're welcome.
for this really great interview. I enjoyed greatly. Thank you.
Okay, well, I enjoyed talking to you too, Tim. Nice to get to know you. Take care.
Yes. And everyone, if you gotten tons of value out of this like I have, make sure you give us some ratings, feedback, share it with your friends, and you reach out to Edna, learn from her, especially if you're interested in investing in multifamily. So with that, happy investing, and we'll see you on the next interview. All right, bye, everyone.
Thanks, Tim. Bye-bye.
Bye-bye.
And that's our show for today. If you have any questions or would like to get further training from Tim Mai, please visit our website at www.dodeals.com/Tim.